Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about pretty much the best swing trading strategy you need, whether you're a beginner trader or you're a full-time swing trader like myself. Now, for those of you that are new to the channel, my name is Carter, so welcome to the team, welcome to the show. And I've been a full-time swing trader for over 6 years, so there's a whole bunch of things that I've learned over the years that we're going to be kind of talking about today. So like, subscribe, do what you guys do, and if you want to learn more about swing trading, check out my school where we have private live streams, we have group chats, we have quizzes, lectures. It's absolutely fantastic. And the thing is, guys, I don't believe in alerts or anything like that. I believe in teaching people the proper steps for becoming a swing trader. Now, a lot of people love to say, Carter, well, just do alerts. No, because if I don't send alerts, then you're not going to know what stocks are moving and grooving. But we do talk about stocks with the opportunity, and then you guys can make your trade. So check it out. It's absolutely fantastic. And for the first 3 people, only 3 spots left for the code half off. So check it out. And guys, let's jump into this here. So when it comes to swing trading, I do want to talk about a stock that we actually recently traded here. And it's not ASX, which is an absolute great one. It's ticker symbol ABSI. Now, ABSI here is a very similar thing to the other stock we were looking at for like half a second. But the thing about this one here is why I love it. It's actually very, very simple here. So we have this nice upward trend. Trends, in my opinion, are super important. Probably one of the most underrated things swing traders look at. For me, I love a nice upward trend. You know, I'm a buyer. I go long on my positions. I buy low and try to sell high. Some swing traders are short traders. So what they do is they're betting for the stock to go down in price. That's not the strategy and trader I am. So, you know, if you're looking to become a short trader, you know, the biggest issue I see with people that short stock is there's no max amount of money you can lose. And the reason why I say that is because if you buy a stock at $1, the worst it can go to is 0. Compared to if you short a stock at $1 and it goes to $10, now you're out -$9. So it's always smart. Do your own research, do research, and kind of pick and choose the trader you like to become. It's super important. But this strategy here is awesome. So let's kind of start breaking it down here. So the thing about the strategy and why I love it is what I really like. I like to have anywhere from pretty much the previous 5 to 6 months of some sort of upward trend. So with this past month here, we had 1, 2, 3, 4, 5, 6 months. So the stock has gone from lows at about $1.11 all the way up to $6, establishing really nice buying pressure. Now, the thing about swing trading is you don't pick and choose random companies to buy. You're looking for stocks with some sort of opportunity that are on something called a support line. So a support line could be a variety of things. This stock has 2 types of supports. Let's break down the first one. The first one is a price support. So what that means here is you guys can see each and every time it hits this $4.50 mark, we get a lot of buying pressure there, right? So it comes in contact once, twice. Recently here, this is where we entered at about $4.50. We hopped in and the stock continued to rally up. Now, you might be saying, well, Carter, it actually had it as resistance here. Yes, when the stock was trading here, what we have a tendency of seeing, you know, with just basic technical analysis, which is just looking at charting, pretty much states that old resistance has a tendency of acting as new support. So this is why we're seeing this line here. You'll see it here in a second, but look at this blue line, resistance, right? Getting a lot of selling pressure. It breaks out above it. Now it acts as new support here. And this brings me to my second support line, which is moving average lines. So moving average lines pretty much take the past whatever day moving average line you have. So in these stocks, or in this stock here, I have the 90 and the 200-day moving average line. So the red one is the 200, the blue is the 90. So it takes the previous 90 days, merges them together to form this line. This line acts as trend indication. So you can look at it and just get a general idea of what type of trend we're at, whether it's an upward trend, a flat or consolidating stock, or a downward trend. So in this situation here, we have a nice upward trend in the previous 6 months, which is really great. Now, another thing moving average lines act as is support and resistance. So you guys can see when the stock was pretty much below it, it acted as resistance here, right? Where we get good amount of sell off here. Now it comes in contact, it hits it. This is where we hopped in, and now the stock is slowly moving its way up. So these indicators are super important. Now you might be saying, well, Carter, what's the difference between the red and blue? So the red is the 200-day moving average line. It just acts as a harder support, harder resistance. Personally, if I could buy every stock at the 200, I would, but the reality of it is the 90 does a very, very good job. Another indicator we use is actually this green squiggly line here on the bottom. This is what we call the RSI line, also known as the relative strength index. This pretty much determines the momentum for a company. So historically with trading or investing, anything under about a 30 or even, a 35 is considered undervalued. Take that with a grain of salt, because just because it's undervalued on the RSI doesn't mean it will reverse one way or the other. If you're only looking at the RSI and you're like, oh, it's a 35, let me buy it. No, because there is a lot of situations where the stock just continues to sell off, as well as when it's above a 70, it's considered overvalued. And so there could be situations where the stock goes up higher and higher. But in this situation here, the stock was trading for about a 29. The last time it was trading for a 29 was all the way back in here, where the stock went from $1.11 up to about $1.50, which might not seem like a huge move, but guys, that is a 35% move, that's pretty good, right? If I could take 35% every day, I would, but no, that's never going to happen. If I could take 35% every week, I would take it, or every year, I would take it. But anyways, the thing about swing trading, right, is a lot of it is just those base hits. So it's those 1, 2, 3% returns. That's what makes you a full-time trader, is you're just being very, very consistent. It's like going to the gym, is the best approach and mindset I've always had with trading. Is you're going to have days where you don't perform as well, but overall, if you're going consistently, you're building endurance, you're working out, you're getting in shape, your trading will do the same thing, right? It'll get better and better and better the more you do it here. So with this trade here, let's break down our risk management skills we had with it. So looking at it here, like I said, we took a position near and around this pretty much $4.50 area. Now, the reason why I took it there, very simple, because that is where we had a lot of recent buying pressure, as well as the moving average line was there. Anything when it comes with swing trading, I do think is very, very important, is to understand your risk management skills. So in order to have good risk management, is you need to understand your stop loss, your profit, and everything when it comes to your trade here. So with this situation, we hopped in at about $4.50. We set our stop loss or our target price at $5.76, which is that old resistance here, as you guys can see. Now, with our small account, you guys know we're doing a small account challenge. We did take our profit, and the reason why we took it is because we were up about 12% or 6%. I believe it was 6%. Go check out our last video where we broke it down all in detail, looking at our statement and everything like that. Now, with this trade here, we set our stop loss near and around $4.19, a hair below that moving average line and below that lowest wick here, which is very, very important. So now as the stock climbs up higher and higher and higher, why did we sell? Well, with a smaller account, it's always smart just to take profits when you can, because like I said, that is what grows an account. So as my position goes higher and higher and higher, I use a trailing stop loss, and I just set it 2% behind its current price. So if the stock sells off 2%, we're just going to move on to other opportunity and take our profit. And that's kind of what we did here. And as we look at the hourly chart, you guys can see a very, very nice reversal coming. So you guys can see it broke down below these moving average lines. Now it pushed out, and now it's slowly working its way up. You guys could see a very similar situation where it fell below these moving average lines, boom, 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 broke out above it, and then rallied its way up. pretty much went from about $4.94 all the way up to almost $6 a share just by looking at the hourly chart. So this is a very, very simple, strategy you guys could do, and one that I've done for over 6 years to trade full time. If you guys have any questions, feel free to ask, and we'll end it here. I hope you guys all enjoyed it. Don't forget to check out my swing trading school, code half off to get 50% off. And guys, we'll see you in there. Like, subscribe, and we'll see you guys in the next one. Take care.